I think a very common trope in crypto is people being like, well, my way is the only way that works. How can this be right if you're not looking at volume? You're not looking at this. You're not looking at this. That's just not how I trade. I purely look at the chart. I'm mechanical in my process in terms of what I'm looking for. It's very cut and dry for the most part. And I just stick with it and you just trust the plan. I don't try and overcomplicate or make what I do sound more complex than it is, because it's not that complex. The TA part of trading is the easy part. Marking up the chart is easy. Managing risk, managing emotions, managing the trade, the waiting, patience, the psychological aspects. That's the hard stuff. That's the stuff that you can't really teach, that you just gain by doing and doing for a long time. You're never gonna become a successful trader until you start actually taking your own trades and realizing that, holy shit, this is a whole lot different when money's on the line, right? All of a sudden, I'm scared of getting stopped out because I don't want to lose money, or price goes up and you get euphoric and you don't want to close because you think it's going to keep going. That stuff is experiential. You can only learn that stuff by doing. That's the hard part, in my opinion, of trading. It's not the drawing the lines on the charts. That's easy. That's why there's 100,000 TA gurus on Twitter, right? It's not very hard to mark up the chart and make it look like you knew exactly what was going to happen. As much as people want to shit on certain people online for maybe being wrong or having a bias, at least they have one and they're sharing it publicly. A lot of the people talking shit aren't sharing anything publicly. And I have more respect for someone who shares their bias, even though I might disagree or they might get it wrong, than I do for someone who just talks a bunch of shit but provides no value or is not even straightforward with their analysis. More respect for the guy who's at least sharing something. I'm wrong 50% of the time. Who cares? Your risk reward's 2 to 1, 3 to 1, you're making money. So the only thing that really matters is your P&L. What you post on Twitter, what other people post on Twitter. If you posted a long on Twitter and it went to target, but you didn't actually trade it, did you really win? You might collect some Twitter clout tokens. Take it from me, I'm a clout goblin, but those don't pay the bills. Your landlord doesn't accept Twitter clout. You need to be making dollars at the end of the day. It doesn't matter if you're not actually making money. None of it fucking matters. All that matters is your P&L. Is that bullish or bearish? Is your P&L going up? Keep doing what you're doing. Is it going down? Okay, maybe you got to rework some things. Don't let the Twitter noise and the hype and the you missed out on the bottom, you shorted the bottom, you long the top, and all the emotional bullshit cloud you, right? Twitter, in a large sense, is marketing. Yes, it's dopamine for some people. They need to scratch that dopamine itch. But for a lot of people, maybe they're selling a service. Maybe they're trying to get you to buy into their group. Maybe they are trying to just grow their audience because there's tons of money that can be made through affiliate marketing, sponsorships, and things like that. And I'm not saying any of those things are wrong. I have no issue with paid groups. I used to have a paid group. I have no issues with people having exchange partners. I have no issue with people doing ads or using ref links. Get your bag however you can. As long as you're not purposely stealing from people or you have malintent and you're trying to fuck people over, I don't care how you get your bag. And I think more people would have more money and would be a lot less angry if they were more focused on making themselves money instead of worrying about how everyone else is making money. But my point is, you have to keep that in mind, right? Is there an ulterior motive? Is there a reason someone on Twitter might want to appear to never be wrong? So you have to keep in mind what people's motives may be, because at the end of the day, the only person who has your best interests in mind and the only person whose opinion matters is your own. Are you making money? Yes or no? Could I delete Twitter tomorrow and still go about my life and trade? Yes. Yes, it's nice. I make money from having a large Twitter account. I don't try and hide that. You guys see, I do ads and things like that. Why wouldn't I? I've built this audience. Why not monetize it in some way? But at the end of the day, I'm honest with you guys about if I'm getting paid on something. I obviously let you know, but I'm also honest about my trades. I don't care if I get shit wrong, because I think that as much as my stuff might not be as flashy as some other stuff you see on there, at least it's consistent. I post my wins and my losses. None of it gets deleted. So that rant's over. Keep that in mind when you're on Twitter and you're seeing people gloat about being long or being short or whatever. You were right, I was wrong, or I was right, you were wrong. Most people aren't actually trading. All that really matters is, what are you doing? Are you making money? That's it. That's the only thing that matters. All right, guys, want to give a quick shout out to the partners of this video, Tenet. So Tenet is the only blockchain that is scalable and secure enough to handle the development of the $10 trillion AI market. Tenet disrupts the proof of stake consensus model to enable the most secure smart contract network ever created. They want to give true utility to liquid staking derivatives derivatives by allowing a diversified basket of assets, so staked Ethereum, Atom, Matic, etc., to secure a single network. Just like blockchain has challenged the traditional finance market, Tenet is looking to challenge the AI market. So Tenet really views themselves as the combination of AI and DeFi. There's a huge team behind Tenet. The CEO, Greg Gottman, was the former CMO at Anchor. He also worked on ecosystem growth at Cadena. Their COO, Dan Peterson, was a revenue operations specialist at Blockdaemon, which is a major staking firm with a multi-billion-dollar valuation. They've got a huge team. Currently, they're building EVA. Their first major AI application is a keyless Web3 mobile AI wallet to make crypto easy for the world, featuring full AI assistant. The idea is this is going to make self-custody feel more like logging into a bank app. So if you want to be part of the industry's most secure and scalable network and make DeFi accessible again, check out their website, tenet.org. Thanks so much for Tenet for being the partners on this video. There's a lot of hype and momentum on social media right now for these guys, so I'll leave all that information in the description of the video. Let's get back to the charts. What's the max number of trades you have running? So it's not about number of trades, it's amount of risk you have on the table at any given time. This is a really good question. So let's say your maximum risk that you want to have out on the market at any given time is 5%. So let's say your trading account is 100 grand. Okay. You don't want to risk more than 5%. That's your risk number. That's 5K, right? If you have 1% trade open, 1, 2, 3, 4, 5. So you have 1% trade opened. If all of these get stopped out, you lose 5 grand. So in this instance, you could have 5 trades running. And a mistake a lot of people make and how they blow up their account is they go, okay, well, my risk, I'm going to risk 2% per trade. But then they open 5 trades, each trade with 2% risk. Well, guess what? What happens if you're in 5 separate longs, each with 2% risk, and the market nukes and you get stopped out on all of them? You've just lost 10%. So it's not about the number of trades. If you want to lose 5% max, you could have 1 trade with 5% risk on. You could have 5 trades with 1% risk on. You could have 10 trades with 0.5% risk on. So it's not about the number of trades. It's how much money do you want to have at risk at any given time. So when I say I'm risking between 1 and 5%, that's of my account, right? That's of that trading account. That's not per trade. Maybe that's 1 trade, maybe it's 2 trades. Because if you say, hey, I want to risk 5%, but then you open 5 trades, each with a risk of 5%, you're at risk of losing 25% of your account. You have to remember, the crypto market is very highly correlated. So if you have a bunch of longs open on Bitcoin, Ethereum, and a bunch of shit coins, if Bitcoin nukes, there's a very good chance that everything else nukes as well. So if you have all these trades open, and yeah, you're like, well, I'm only risking 2% on that trade. Well, yeah, but if you have 10 trades open at once at 2% risk each, really you have 20% at risk. So it's not about the number of trades. It's not the number of trades. It's how much risk do you have on the table at any given time? And is that an amount you're comfortable with? So hopefully that answers your question, but that is a very good question. And that's something you have to think about, right? I know a lot of people who have fucked themselves over because they have too many trades on at one time.